Good morning, traders. I'm Pete and this is Trading Kitchen. Welcome back. I will be off for about 4 or 5 days, so for the whole week, but I will leave you with this video in which I want to talk about something that I'm seeing is you are struggling with, which is identifying the right zones to trade. So trading is a very difficult thing, you know. We must try to make it easier, okay? Because if we try to overcomplicate it, it will become too difficult to do. So to identify the right zones and basically to trade, every day I try to be in the right side of the market. What I mean by this, I try to be in the right order flow. So I try to identify where the big moves are, where the big volumes are. Okay, so I want to be a ram or a fish. Okay, I want to stay beside the shark, not be as food. How can we identify the big moves, big volumes? Basically, we can use order flow, we can use the DOM, we can use heat map. Okay, but basically these are all tools that belongs to the same tool, to the same visual thing, which is price action. Okay, which is not a visual thing, to be honest, but you understand. So the most important thing looking at the chart is price action. So how can we identify big moves using price action? My personal way to do that is looking for a manipulation. Okay, so without considering bias, without considering POI, something like that, you know, what's a manipulation? A manipulation is basically move, okay, in which we grab the liquidity, and so this is the liquidity, and we broke a structure. Okay, so we change the order flow. This could be a huge move, or could be just a quick retest, just a quick move to grab the liquidity on the other side, like this. So if this could be, for example, it's just an example, okay guys, so if this is liquidity, okay, we have breakout structure here, so we expect moving higher, but this is only a move to grab the liquidity here, so this become liquidity. We tested the 50% of the unmitigated supply zone and we move down. We grab another liquidity here, we broke this structure here, okay, and so what we are waiting is a test of this demand, which broke a higher time frame structure. Okay, here we must see something in terms of order flow. So obviously if we have order flow, if we have footprint, if we have heat map, will be so much easier. To be honest, the volume suite by Leviathan, I can't spell his name yet, it's enough, because, you know, for example here we identify aggression and absorption. Okay, so we grab the liquidity here, aggression, absorption, retest, and go up. This kinds of move, you know, you can find it everywhere. Okay, for example, like here. So climax, absorption, these are all trapped sellers. Price then retest the zone and go higher. Okay, this is that. So red delta bars means strong bearish pressure. Green delta bars means strong bullish pressure. Okay, but it's everything here. Once you identify the right zones to trade, which could be this one, okay, this one, this is another liquidity level, for example. Okay, let me show you the liquidity. So grabbing the liquidity, this liquidity sweep, it's crucial, okay, because it shows me such a kind of manipulation, which could be bigger, could be a smaller one, but it's such a kind of manipulation. Okay, so we have break of structure here, and so go home. I know you haven't heard about valid highs, valid lows, highs, protected lows. It's a good way to identify, in my opinion, it's a good way to identify manipulation, or better, liquidity level. So I don't use it to, identify the order flow, but you know, it's basically this. When we saw valid high, valid lows changing, so right here, for example, it means that when we see this valid high, it means that something is changing in terms of order flow. Okay, here is the same. It could be a higher move, or it could be here just a quick move to grab orders, probably here, to move price down. Okay, but if you do use value highs, value lows to identify liquidity, could be so much more precise to identify the right zone to trade. How do you identify the zone, for example? So let's have a look today London session. Okay, we can delete everything. So we start at 8:30 London session. It doesn't matter. Obviously, during the opening session, there are these rules. Okay, cannot be satisfied because it enter other algorithms. Okay, on the opening session. So that, to be honest, is very difficult to master. But anyway, just wait for a quarter, 50 minutes to pass before identifying, before starting to identify the right structure, okay, the right narrative. Because, you know, if you use value highs, value lows to identify liquidity and to highlight the right zone to trade it, this is the right way to understand the narrative as well. So, for example, what I'm looking for is liquidity to be taken on the recent valid low like this. Okay, so this is liquidity, and a huge displacement, okay, in which we broke the recent valid high. So this could be a good zone to trade in. Okay, so for example, here I will looking for something like this. So below the 50% fair value gap and imbalance, I will set my entry here, which is the stop loss. Yeah, it doesn't matter. But what is tell me this order flow here? That probably we missed this zone because we have a valid low here. This is the liquidity. Okay, this is the valid high, which is not highlighted here, but don't be so strict with it. Just try to understand the concept. This is the last high, the last zone in which we have enough bearish pressure to move the price below the last low. Okay, so we have this break of structure here. Then price grabs something here. So the right liquidity, to be honest, is this one. And does it make sense? Because we have a fair value gap here. So before entering here, we must know that there is this could be the entry, because we have the responsible zone of this breakout. Okay, with this fair value gap, I always consider a lot for fair value gap, because fair value gap imbalances tell us that we have a strong bullish pressure here. So we go on, same thing, no matter the bias, no matter the higher time frame. This is, this is another very good zone. Why? Because we grab, this liquidity here. Okay, we move down, breaking this low, okay, which is the last low that push the price away, breaking the previous structure. We have 1, 2 fair value gap. So the first fair value gap above here, the 50%, this one could be a very good zone to enter. Stop loss just one tick above the high. Why? because this is the only level that we are mathematical sure, in which we have in which we are sure mathematically, okay, that this zone gets invalidated only here, okay, because we are inside the bearish inside the bearish order flow yet, okay. Here not, because this zone is not valid anymore, okay. Take profit 1 to 1, 1 to 1.5, or the low of the previous range. So we go home, look at here, we have this liquidity, we have this breakout structure, and so we have this zone. So we are waiting for the zone to be retested. So I'll try to extend the zone. Also here in this zone we don't have any further gap, okay, so it's not strong zone. This to me, what we have looked to do in a zone like this is just take our odds in the odds in our favor. I mean, so for example, enter here. Why? Because it's a last liquidity, okay, inside the discount zone. So if this is our trade, will be a good 1.1.9. But let's go home. No liquidity here because we have qual high, which is a level that usually, I mean, it's a level in which price go retesting to grab liquidity. So we move. So this is liquidity here. We broke this low, so the zone is this one, okay, where we can enter just here. Why? Because we have a gap here, so this is a trade in which we wicket out, okay, and this is another kind of strategy in which when you see when you are wicket out, you can re-enter immediately, okay. So when candle close here, just wait for retest to re-enter again. But as you can see, it's not necessary because this is another zone, okay, in which we grab this liquidity, sorry, this one, and we go down to re-enter here on this fair gap. Stop loss, sorry, the fair gap is this one, okay. So this is the trade, okay. So I do not re-enter just when I see weeks. It's a little bit dangerous as a trade, but anyway, you know, this is another liquidity. It's not a breakout structure, is liquidity. Why I say that? Because we have this breakout structure here, okay. Why breakout structure? Because it's not closing. It doesn't matter. We are inside 15 seconds time frame, but if we move on the 1 minute, on the 1 second, this is body closure. So market is structural. When I see price above here, the market is gone above here. So obviously we can be liquidity, or it can be the breakout, okay. So this is the new zone, okay, lower time frame untested zone, where we enter sorry, okay, just right above here, because it's at the beginning, okay, the origin of the move. No, so this is the breakout structure. We go down here, the first point of liquidity inside the zone. Stop loss just one tick below the low, take profit here, okay, and we got it. We did 2.75. Then we have another breakout structure here. These are all quick scalp trade, which could be a little bit stressful, or to be honest, I prefer this from a long trade, a long time frame trade, higher time frame trade. And this is another TP, okay. Then we have Price is moving down. Price broke. Sorry, grab this liquidity to move higher from this. So this is an higher time frame. So 1 minute demand zone. Price grab the 50% here. Okay, stop loss. 1 tick above, 1 tick below, and 1 to 1. And this is another trade. As you can see, we have lower time frame structure. Why? Because we grab this liquidity. Okay, we broke, sorry, this valid high. So lower time frame break of structure, and this become a new zone where we trade. We trade on the 50% or in the first fair value gap, which is not on the first liquidity. So the liquidity is this, because we have here equal lows. Okay, so it could be this one. I probably entered here, but okay, you can use this or this. Okay, 1 tick above and we get our TP. To be honest, this is break even to me, because once I saw price almost touching the TP and drastically and quickly turn back, I moved my stop loss to break even, or to be honest here, or a very small loss. Then we have his own here, because we broke. Oh no, sorry, no, this, yeah, could be this one. Well, to be honest, no, I don't like this zone, because we have 2 equal lows, equal highs here, so I don't like it. I just want a liquidity grab like this one. Okay, we grab this liquidity, we move down, breaking this structure. Okay, price re-enter the zone, move down again. So this is the good liquidity. We have a fair value gap here, so this is to me the perfect entry. Why? Because we have liquidity, we have break of structure, price re-enter, generates another liquidity. Okay, breaking another structure here. This is a very good trade. Okay, very small trade, very quick scalp. But what you see, we have this lower time frame untested demand or zone, okay, in which we have break the structure here, re-enter the zone, make a quick move upside, re-enter, back again, fair value gap, displacement, green candle means strong bullish pressure, and voila. Then we have liquidity here. Okay, so you can have 20 trades per day simply using 50%. Okay, confirmed by some fair value gap, some liquidity. Okay, choosing the right zones with 1-to-1, it's enough. 1-to-1 risk reward ratio, it's enough for us to make a good profit every day. Okay, every day. Okay, so we go up. No, here no zone, no trade, because I want to see price moving down here. But look at how many take profit we do have here. Okay, let me see if we just missed something. No. So price moving up, moving down, moving up, moving down. So this is the stop loss probably. So because we have this lower time frame untested supply zone. Okay, same thing, displacement, liquidity, grab the liquidity, go down, fair value gap. Where is fair value gap? Is here and here. Okay, so this is all fair value gap. We enter on this, on the first one. Okay, stop loss right above the high, take profit here. So it's your choice when you have this kind of profit. Okay, will you move your stop loss to break even or not? I personally do not do that here. Okay, or probably I move just here, but not in this price action, because usually price grab the equal lows, equal highs to move in the opposite direction. But anyway, this is a stop loss. Okay, so And the very beautiful thing is when we get a stop loss, it means that we change the order flow. So it could be immediately good for the next trade, because a stop loss generally creates another structure, another zone, which is this one. Okay, so here you can enter right back here. Okay, the 50% limit order. I use the limit orders for the 70% of my trades. Stop loss here, or you can enter, which is something that I really like, on the first liquidity here. Okay, to have less trades. I know. Oh, sorry, no, this one. Okay, it doesn't matter. It's the same. So to have less trades, but with a huge risk to reward ratio, because here on the same take profit we have 2.3, and we go up again. This is liquidity, this is lower time frame, sorry, break of structure. So this is the new zone. We are going to trade from liquidity exactly at the 50%. I do not take any trade above any long trade above 50%, because I want to have the premium discount concept, premium discount theory to be satisfied. Okay, risk to reward must be positive. So this is another take profit. We missed this order flow. No, nothing. Okay, so you know, this couldn't be any zone, because we do not invalidate it. We did not invalidate any structure here. So when price is close, if price close below this valid low, could be good. But you know, here this is all internal liquidity. This is no all internal dynamic liquidity that needs to be mitigated. Okay, so we reach the higher time frame buy side liquidity. So we are going to see some changing from the order flow. Okay, but we need a confirmation of this. Which is the confirmation? A 1 minute supply zone here, same concept. So this is a good zone to trade. From where we need a further gap, which is this one on the 50%. Okay, perfect. Now trade. Okay, we probably move bearish right now. Okay, so we grab this the zone, we move higher. To be honest, this is another zone we can trade from. Okay, so price grab the liquidity, broke the structure, re-enter 50% and go on a TP. We have this break of structure, so this new bearish zone. Okay, to be honest, look, we have this gap and we go down, but we miss the TP, so this is stop loss or break even. If you want to move break even, we'll move my break even, to be honest, here. So this is stop loss, price re-enter the zone, move down. So we are inside the higher time frame. Okay, buy side liquidity. So we just expect now the price to move down again. In the meantime, let's see if we have some trades. Okay, like this one, grab this liquidity here and break a structure. So this is a trade, and if you want to have a great risk to reward ratio, you can take this one. Okay, so from to there is no liquidity. I mean, this is no liquidity. Okay, this is no liquidity sweep. I want to see close levels. Okay, this is just a breakout. Price grab the liquidity here and to mitigate the untested zone and move down again, where the unmitigated demand zone, which is this one. So let me see here, but we are in the higher time frame. So let's have a look if we have some higher time frame untested demand zone, which I've already highlighted, which is this one. Okay, so what does it mean? It means that price now probably go grabbing something here and go down. Let's see. But it doesn't matter. This is forecasting. Okay, I don't want to predict the market. I'm not able to do that. I don't care to do that. I just trade what I am seeing. Okay, so let's have a look how many trades we do have. So one, in terms of R, consider it just 1 to 1, not this like that it was 2 from 1.1 to 2. So just consider 1 risk reward ratio 1 to 1. So 1 to 1 because this is stop loss, 2 3 because this is only one trade, 3 and this. Okay, this is because we break the structure here and we go TP. This is TP 4, 5, 6, 7, 8, 7, 9, 10, 9. So in just 2 hours we have 9R, okay, without considering any trade in which we have R higher than 1 to 1. We have 9R, just simply identifying the correct zones from which to trade, liquidity, displacement, price re-enter the zone. I want to see a fair value gap above 50% if I want to go short, below 50% if I want to go long, and set the limit order. Okay, that's enough. So guys, let me know what you think about using the comment section below. Like, subscribe, same old style, join my Discord group. You have my trades every day, you have the community, and above all you have free Notion template with my model. Thank you very much guys, see you in the next video.